2025, gold didn't just go up. It had its biggest year since 1979, tracking towards roughly a 72% gain by late December. As for silver, silver went absolutely crazy, which shocked even me, to be honest, briefly pushing above $80 an ounce and showing triple-digit gains on the year. I'm actually in a trade doing silver at the moment, so we'll see how this goes. So the question isn't, did gold and silver go crazy? The question is, what actually powered it? Because understanding what powered it can give us insight into what might happen next year in 2026. Oh, by the way, quick disclaimer, this is educational purposes, not financial advice at all. I might love gold and silver, but I am not telling you to buy or do anything. Anyway, gold is on track for about a 72% annual gain towards the end of the year, which is of course the biggest since 1979. However, silver pushed up to $80 an ounce, with estimates showing roughly 181% year-to-date gains. Depending on, of course, the exact day you measure, and depending on the day part does matter, because silver, of course, didn't just walk upward. It sort of sprinted, face planted, sprinted. Again, and the volatility was absolutely insane, even during the surge, which you might have seen if you've been following the charts. So in this video, I'm going to cover the engines that powered the move, the 3 dials you need to watch going forward, and 3 realistic scenarios for where gold and silver could go next year. So engine number 1 is what I call the money engine. When people think interest rates are going down, gold, of course, often benefits because gold doesn't pay interest. So lower rates reduce the penalty for holding it. And of course, like I always say, you have to think from the perspective of a big institution. Then this makes a lot more sense. Anyway, in late 2025, the surge in precious metals was directly linked to expectations that the Fed would cut rates in 2026. Now, of course, add in the US dollar. The dollar was on pace for about a 9.5% annual drop, steepest since 2017. Why does that matter? Because gold and silver are priced in US dollars globally. So when the dollar falls, it can mechanically make dollar-priced metals look higher, and it also increases buying power for non-US buyers. So in other words, I have a really good quote here. If the measuring stick gets smaller, the thing you're measuring kind of looks bigger. I could make some terrible jokes about that line. Anyway, engine number 2 is the safety engine. Gold is basically the I don't trust the vibes of the market asset. Gold demand in 2025 was heavily supported by safe haven flows amid geopolitical and economic uncertainty. And I want to make a key point here. Gold doesn't need the world to come crashing down. It just needs enough people, big institutions, governments, and of course households to say, I want a chunk of my wealth in something that maybe doesn't collapse 9% in a year, or as fiat currency, it's based on someone else's promise, basically. Now, let's talk about the real chaos gremlin on the charts in 2025, silver. The silver market was on track for its 5th consecutive annual deficit in 2025, estimated at around 95 million ounces, and the cumulative deficit for 2021 to 2025 was almost 820 million ounces. Wow, that's a lot of silver. By the way, for those who don't know, deficit basically just means more silver is demanded than supplied for the period. Over time, deficits can, of course, tighten the market, especially when investment demand shows up at the same time. Various news sources also pointed to strong industrial demand drivers for silver, including solar cells, electric vehicles, and even AI data centers, which I'm sure you've read a lot about in the news, or you've heard about these at least, all the water they suck up and electricity they use and all that. All this alongside investment demand and speculative momentum. So silver has this personality split, which I think I talked about in my last video, which is gold is mostly a money and a safety asset, whereas silver is a money and a safety asset, plus a factory metal. That makes silver more explosive in both directions. Now here's a key 2025 detail that got people's attention. The United States published its final 2025 list of critical minerals, and silver was one of the minerals recommended for addition compared to the prior list. This addition to the US critical minerals list, so it's a bug that keeps flying in. The addition to the US critical minerals list was specifically listed as one of the factors behind the surge. I almost said purge. Does that automatically mean silver shortage tomorrow? Well, no. But it does signal that the governments are treating silver as strategically important, and that's really key, because it sits inside modern tech supply chains. One reason gold's 2025 mood felt so sticky is that buying wasn't coming from just only one group, which I talked about in other videos. Global gold demand hit 1,313 metric tons in Q3 2025, the highest quarterly total on record, driven by surging investment demand. China continued adding gold to its reserves, extending a buying streak of 13 months in a row as of late 2025 reporting, and global gold ETFs. For those who don't know, ETFs are basically exchange-traded funds, basically like a stock-like way of holding exposure to gold. Some people call it paper gold, but anyway. These ETFs saw a $77 billion inflow in 2025, up to late November, adding 700 plus tons to its holdings. That's a lot of gold. So 2025 wasn't just retail hype, that's really key. It was broad bid from central banks, investors, and safe haven demand stacking together all over the world. Now, let's talk about 2026, which is probably why you're here for the video. I'm not going to pretend that I know the exact number gold or silver would hit because, I'm just a human, and I don't think anyone knows. Instead, we're going to talk about what professionals do, scenarios and dials. Major institutional analysts laid out a clean 2026 framework with base, bull, and bear cases. This is according to these analysts that I've read about. So I'm not necessarily saying that I know, and this is just what I've researched for the video, okay? So a base case, 50% probability, 4,000 to 4,500 US dollars. This scenario describes a consolidation and a grind higher, supported by things like the Fed easing, central bank demand, and ETF flows. The bull case was given a 30% probability, 4,500 to $5,000 an ounce, US dollars an ounce. In this upside scenario, strong physical demand and ETF flows stay firm. And any big shock, volatility, liquidity stress, or macro fear could push gold higher. The bear case was given a 20% probability with 3,000 to 3,500 to 4,000 US dollars. That's the world where growth improves, the dollar stabilizes or rebounds, and gold gets hit by profit taking. So the takeaway isn't gold will be X. It's the takeaway is that next year is a tug of war between structural support and a possible risk on comeback. Obviously, I'm quite biased because I'm a gold channel and I happen to love gold and silver and copper and all these other precious metals. So I happen to personally think there's a much higher chance of a bull market next year. However, I can be wrong and I have been wrong many times. So do your own research and don't listen to me necessarily, but watch all my videos and please subscribe too while we're at it. Now, let's cross-check what we've just talked about, because analysts have explicitly described a bearish scenario where higher yields, a stronger US dollar, and a risk-on rotation could produce a gold correction of roughly 5% to 20% from the current levels. So in other words, if markets decide everything is fine again, then money tends to, of course, chase stocks and yield, especially from the perspective of big institutions, and therefore gold could potentially cool off. It's important that in these scenarios I explain all the things that could happen because anything is technically possible in the markets, even if I have a bias, so I'm being very honest here. Now, silver is much harder to price target because it's smaller, thinner, and more emotional, volatile than gold. Silver can amplify gold's moves because it's less liquid and more volatile. So for 2026, I think in two buckets, so to say. Bucket A is the structural tightness stays in place. If the deficit picture continues and industry demand stays strong, silver can stay structurally supported. Bucket B, volatility and pullbacks are normal, even in bull markets. Even in December 2025, we saw silver spike and then retreat. I'm actually in the middle of a trade right now where just after something like this has happened, so silver can be right and still scare you out of the trade 3 times before it works. So let's talk about the dials. Dial number 1, the Fed's direction. Are they cutting, pausing, or re-accelerating? Late 2025 metal strength was directly tied to rate cut expectations for 2026. As I always say, what the market thinks is going to happen. Dial number 2, the US dollar. The dollar had a very weak 2025, and gold's 2026 scenarios, both bullish and bearish, lean heavily on what the dollar does next. Very important. Dial number 3, for gold, watch ETF flows and official sector demand. Massive 2025 ETF inflows and central bank demand are major wildcards, of course. For 2026, for silver, watch whether the deficit story persists. The deficit estimates are one of the cleanest big picture signals we have. So 2025, it wasn't random. I mean, what happened with gold didn't shock me, to be honest. It was actually silver that shocked me personally. I knew gold was going to go up like crazy this year, but silver did surprise me, to be honest. Basically, what was happening in 2025 was it was a repricing of money expectations, uncertainty, and supply reality, especially for silver in this case. 2026, in my view, is not about one number, it's about which world we're living in, whether it's risk on, stronger dollar, higher yields, in that case gold would theoretically cool off, maybe meaningfully, who knows? Or an easing scenario where there's a weaker dollar, continual structural demand, and then gold holds high ranges, maybe tests new highs. Silver, same story, but louder. I mean, I personally think that it's very likely that gold's going to go higher, but I could be wrong, and honestly do your own research. But maybe there's geopolitical things that go, I mean, there's all sorts of things that could happen. And then, gold could continue to go up, but it's really hard to say precisely, but I just have my personal opinions. But I hope this video was useful to anyone. Just understand that silver is going to be, what happens, it might be the same story, but even louder, so who knows. Please subscribe and comment gold 2026 or silver 2026 and what you think might happen in the year coming up. But yeah, thank you very much for watching, and I'll see you in the next one.